Good afternoon, traders. This is Raul Rivera with your afternoon market profile review. Today is Wednesday, June 28th, 2017. Let's get started with today's video. The markets were really in trending mode today, and that made it a little hard to pinpoint levels of support and resistance. We knew we wanted to be buyers because it's a one-sided market. We were looking around 2410 to 2408 in the S&P 500 futures. Unfortunately, we didn't get right down there. We made the lows overnight here at 2414, and that was it. I mean, the buying just began from there all day long. So a very weird day. Recovery from yesterday's Fed commentary. Absolute recovery. We even closed up here above yesterday's highs. So it's the market is still alive. We haven't gone into a funk just yet, and there are buyers still out there in the market. We were looking to buy 2410 to 2408. We didn't get that, but we were also looking to sell 2433 to 2435. I jumped in at 2433 and a quarter, and I got ran over here. When we take a look, I took a couple little small scalps. We don't just we don't just trade the market profile alone. We also have other indicators that help us make other trading decisions. Here early this morning, this indicator gave us a short right around here. I jumped in here at 24.2750, sold at 24.2650. That gave me a nice 1 point profit on a 2 lot. It was only about $100. This trade here, the 24.33 and a quarter on a 5 lot, that was the market profile trade. We hung out sideways before we broke out again, and that was right around here. And we could see, I wanted to stick in the trade, because when we take a look at the cumulative institutional order flow, they weren't really buying these highs. They were really just selling it. And it wasn't until new buyers came in that the market finally took off, and I ended up taking a 6-point stop loss. So you can see here, the 5 lot at 39 and a quarter. Took me out for 6 points. That was a $1,500 loser. And when we go back to the scalper here, I ended up taking a decent short here. Good for, how much was it? 1.5 points, recovering at least $375 right here on this trade rather quickly. Using this indicator, we want to scalp rather than, buy and hold. And that was pretty much the trading here in the S&P 500. I didn't think we would continue the rally like this, but we found volume, we found buyers, and they wanted to rally this thing all day long. Ended the day here with positive 13,196 imbalance. Yesterday we had a negative imbalance of over 52,000. So you can see that even though buyers are buying the market right now, it's not being done with power. Meanwhile, any selling opportunity that we can have, we definitely do it with a lot of power. Next up, we have the gold market. Actually, let's take a look at the 30-year first. So the 30-year, when we took a look at the profile, we knew we were in a B-shaped distribution when we split it here. I'm going to go ahead and split it twice, actually. Take a look. We had a D-shaped distribution. Market traded lower, consolidated. D followed by a B, find a place to sell it. And then when we split a distribution away from there, we end up with even more consolidation. So we really didn't do much. When we switch back over to hybrid view, we found resistance where VWAP and TWAP are, but we didn't really go any further. We didn't retest the lows or trade lower. And at the same time, we can see the cumulative buying here in the 30-year was pretty large. It all began on this move up right here on this bar with a huge overall imbalance, enough to take it from negative imbalance above zero. And then from there, just continued buying into this consolidation. I would expect the 30-year to possibly get a decent pop tomorrow during the overnight session. I had a sell order up here at 156.02, did not get filled, and I kind of knew it was
order canceled.
A bit of a stretch trying to sell it that high. The market didn't have enough in it, but it definitely did have a lot of volume from the 50 lot to 200 lot traders. Definitely building up some volume. Total imbalance for the day looks like a positive 9,700 imbalance, with the market actually being down on the day. And you wouldn't believe that either. If I told you the market went down on positive imbalance, some people would maybe look at me saying, how could there be more buyers than sellers if the market traded lower? Well, it's the truth. They were buying, but the market just wasn't pushing any higher. You got to understand that the futures are super liquid. Big traders can put in big orders without seriously affecting the price of the asset, and that's called liquidity. The 30-year, the 10-year, especially the 10-year, all these markets and all of the futures, really, they all have really great liquidity. We can get in and get out without incurring too much pain because our trading affected the price of the futures contract. So no trades here in the 30-year. Looking at the gold contract, where are you? Right there. Let's switch you over. So gold, we took a long here at 1251 half, ended up taking a loss on this one as well. Let me go to the database here. That's data series, I mean. And show the plots, text and markers, okay. When we zoom in, we knew we wanted to sell the highs and buy the lows. Looks like we were trying to buy it too low and we were trying to sell it too high, but that's okay. The market made a new high and traded lower into this volume area. I decided to come in and buy here at 1251.80. It did trade higher, could have gotten close to 2 points on this trade, but I was willing to hold and try to buy even more down at the lows. We traded lower, took my stop, took about a $500 loss on this one, down 2.5 points on this trade. And as you can see, the market there was no way I would have recovered. I took it off pretty much where the market decided to settle for the rest of the day. I can go ahead and cancel
order
these
canceled.
trades.
Order canceled.
Ended up today with a positive net imbalance of 1,109, and we can see the cumulative tick volume. At the very high we had 500 more buyers and sellers of 20 lots or greater, and then right here on this bar we started seeing the selling, and then the institutions just disappeared in gold. So another losing trade here in gold, but tomorrow's a new day, and I'm gonna go ahead and start working here with some other indicators to generate that little bit of extra trading when we're trading inside of value and we're not catching the highs or the lows. Next up we have crude oil. Now this one I really wanted to just grab my computer and just break it into 30 pieces. So we had the inventory report today. Split the distributions. We have a D we actually have a P followed by a P. Here's where we open. Traded higher, consolidated both in volume and time. Here, traded higher, consolidated at the highest in both volume and time. We have a P followed by a P. And this is the annoying part. We put in a bracket trade to try and short the highs after the inventory report and buy the lows after the inventory report. And the trade that triggered was selling the highs after the inventory report. And I just want to show you something. So this is called slippage, okay? And I posted this on the Tech Meets Trader on my profile as well. So I'm going to go ahead and I'm just going to travel through a little bit here, and I'm going to go to the 10:30 a.m. hour. I'm just going to scroll, and I'm going to scroll, I'm going to scroll. And we had an order set out here at 44.76. And we had that information in our hands well before the inventory report came out. Okay, we wanted to sell 44.76. We wanted to buy 43.50. We come up to 44.76, and right at that exact tick, we experience slippage. And we can see slippage in many ways. And with the footprint, we can definitely see it right here. On the bid side, or the side that would need to have executions in order for me to have a fill, we had zeros. So if anybody tells you, hey, I got short at 44.76, 77 or 78 directly after the inventory report, they're lying to you, okay? Because here there were zero executions. Nobody got filled to the short side on these prices except for these unlucky buyers who pretty much bought the high. So I didn't get a fill on this one, and when we go back to the profile, it is just a darn shame. Let's go back to the hybrid view. Here we traded all the way to the highs of all the way to 78 and traded as low as 91. This could have been a really fantastic 80 plus tick trade, and unfortunately because of slippage I did not receive a fill. This would have been the trade of the day, and making 80 ticks in literally something like 20 seconds. Unfortunately, you know, the market is what it is, and we got to live with it. It's a fair market, but at least we can see the exact reason as to why I wasn't filled. And for the rest of the day, we can see that most of the volume traded up here at the highs. We got a volume point of control here at 44.75. You know, one tick below my short, or what would have been a fantastic short. And it looks like crude oil is going to continue to the upside. It seems like we're going to get a decent relief rally for the time being. Next up, we have the euro. This one also having a pretty decent day. This one's not a P-shaped distribution until, let's see right here, until we split it over here. It's mostly a D followed by a P. And we had, let me just merge these again so it's a little more clear. Okay, and we had this drop here, and I'm not sure exactly what this drop was for. I know we had some news, but the euro reacted pretty negatively to it. We had a buy order down here at 13.15. Came down into single prints, and we had a lot of volume down here. So this is really, really interesting. Usually when we have these tails to the lows and then recover quick, there's barely any volume, but in this instance there was plenty of volume down here. We were looking to buy 13.15. We weren't really looking to sell because there's no overhead resistance that we can see in the near term. We would have to go back maybe a month to see possible resistance area at the highs, and I always say the market has a short-term memory. You know, we want to look at points of levels of, pretty much levels of support and resistance at areas that are most recent in the market's memory. So this one I'm going to go ahead and
Order
cancel
canceled.
it. And we can see off these lows, pretty decent rally right back up to the highs, and then just consolidation to the right. finally, we have the yen. And this one, again, we wanted to be sellers at the highs and buyers at the lows. We didn't get an opportunity to come into this market at all. And when we take a look, most of the trading occurred inside of value. That usually signals that we had a pretty choppy day, and all we did was consolidate. And overall, you combine the two distributions yesterday and today, and you have yourselves a B-shaped distribution. I would expect the yen to continue to trade lower, take out these lows, and possibly head lower. And again, the yen, was it up on the day or down on the day? So when we take a look at the yen was down on the day by 0.15%. But notice the overall imbalance was positive. Again, how could we have positive imbalance or more buyers than sellers even though we traded lower? Well, volume doesn't lie. And when we take a look at volume data, this is what we get. There were definitely more buyers than sellers today. And this again goes to liquidity. Big players can get in and get out very quickly because the futures markets are very liquid. You could get in and not really affect the price of the asset or the futures contract just because you're a large player. The liquidity is there. And these large traders, we can see, more buyers than sellers, really. They were selling very early in the morning, and then they were buying the entire time on today's consolidation. All right, that's it for today's video. Hope you guys liked it. Hope everybody has a great evening, and as always, happy trading.